Hello, everyone. Good evening, and welcome to our another episode of webinar for the regulatory insights, whose topic for today is electricity forward markets. Taking you all ahead, I would like to hand it over to our executive director at FSR Global. Sweta.
Thanks, Amrita. Firstly, a very warm welcome to all the speakers here. We have a very interesting lineup of speakers on a very interesting topic, which is quite pertinent to the Indian power market. And what we have for you today is on forward electricity markets. And what we would love to hear from the speakers today is it's not the question of whether or not forward markets would be needed, but rather to understand, do we see forward markets mushrooming more in the short term, medium term, or long term? And then particularly, what would be the role of power exchanges and OTC platforms, and how will their coordination or complementary role between the two be? And then, of course, if people were to participate in these forward markets, do we see transaction costs of coming to these platforms as a deterrent, particularly also given the financial health of distribution companies? Then, of course, probably too early to already discuss, but if we can also throw some light on what sort of contracts could be designed so that we facilitate these forward physical contracts onto the market. And then, of course, going to some of the questions, whether it's a chicken or egg, do we need enough volumes on the spot market, or do we see forward markets sort of complementing, or do the two sort of work together? And then, of course, when you do look at forward contracts and forward markets, if they will ultimately end up participating at the dam, then in the case of India, will there be a true price discovery given that we have market caps? And also, how do we see other portals or platforms such as the Deep or Push sort of working in the scenario should we were to bring forward markets in? And then, of course, a little into the very future when we talk about forward markets is also, do we envision a forward market for transmission networks, as we see in the case of Europe, which Kem also will try and present the European experience in a bit. And when we talk about forward markets, where does capacity markets come into play? Is it a complementary? Is it one after the other, or do they sort of work in parallel, particularly in scenarios such as India? So today's debate is structured in a very free-flowing way. We have Kem Gautam, who is representing the Indo-Danish Energy Partnership. He will be talking about particularly the European experience with a little bit focus on the Danish experience in particularly. Then we have both of the platforms. We have the Power Exchange, we have IEX, Mr. Rohit Bajaj, and Mr. Kapil Dev from NAME, the OTC platform. And we will hear how they see this panning out. And then, of course, we have the DISCOM perspective, which is quite important because ultimately they'll be one of the most active participants. We have Mr. Shukla coming in from the UP Power Corporation. And then lastly, we would have the regulatory perspective also coming in as discussants with Mr. P.K. Pujari and R.P. Singh, who are distinguished fellows at FSR Global, and Morten Pinstrup as well, who has been working with Kem to produce two fantastic reports that the in-depth project has released, which is discussing these peculiarities of India and how can we sort of already prepare in that direction. So without taking any more time, I would like to offer the floor to Kem to make your presentation and present the European views. Thank you.
Thank you, Sweta. I will just share the screen now. I have prepared a small presentation. Do you see the right screen now? I tried this before, but...
Yeah, you'll have to make it on presentation mode.
Is it in the presentation mode now? Or?
No.
Not really?
Yeah, uncheck and do it. The second time worked. So.
This is the screen now. Or maybe you can share it from your side, so you have my presentation, I would assume. I'll just stop sharing.
Amrita, do you
when you are sharing, when you are sharing the presentation, I can already talk about what my presentation
Please
is
go
going
ahead.
to be, right? So I'm going to give a small historical perspective on how the markets develop in the Nordics. I'll talk a little about Denmark, and then finally I'll try and link it up with India and try and show the similarities and the different context we are in, so we can set up a debate in a way. So that's how my presentation is going to be. Traditionally, I will want to take you all the way back to 1990 and Norway. This is where I would want to start my presentation. Traditionally, bilateral physical contracts were used for buying and selling electricity between vertically integrated utilities. Electricity prices at that time, Norway, which was dominated by hydro, was pretty high. There was a lot of overcapacity and the system was inefficient. So the idea was to liberalize the market. It was to free up generation and transmission into different distinct category and introduce a day-ahead market. A marketplace where everybody, despite the sizes, go and trade in equal term and clear at the same price in the same time. Introduction of the day-ahead market helped everyone everywhere. The prices of electricity went down, the efficiencies in the system also came down. But at the same time, the downside was there was volatility in the market. The prices were different and power plants were not always being cleared, so there was the price risks for them. Brokers started quickly to develop like the ways to hedge themselves. So they started the physical forwards, the physical bilateral trade right after the introduction of the market once the volatility was discovered. The physical trade is not the easiest of an option, especially in this context. Norway had adopted zonal pricing and the country was divided into 5 different pricing areas. So if you had to do the physical trade, you had to have 5 different, if your footprints were everywhere in Norway, you had to do the 5 different trades. So they started looking for a simplified way and they found a good option of using the system price. The system price was basically a virtual price for entire Norway at that time, now the Nordic zone. It is not really the price at the point of delivery, because price at the point of delivery would be the area price. But using the system prices made trade much more easier and made trade to go from physical to more of a like financial transaction. So more and more trades could be executed. By 1994, in about 1995, the day-ahead market started at around 1991. By 94, already Nord Pool had platform for both physical forwards and also the options. Can you please change the slides? So after the Norwegian liberalization, other neighboring countries followed. In 1995, Sweden joined, and there was proper first, like across the country, electricity market already. And then soon afterwards, Finland joined. For Denmark, it took some time, but during the late 90s, 1999, Denmark also joined the Nordic market. And it's interesting because the main objective of Denmark joining the markets was not to reduce the inefficiency, but it was more like to reduce the CO2 emissions. And at that time, the Danish wind industry was also getting ahead. So there was quite a policy push to put all the generators, all the traditional, like Denmark system is more like coal-based at that time. So there was this policy push to put them into the market. They were in the market, but what happened was because the hydro was so cheap in Norway at that time, particularly, the generators really struggled and government had to intervene. They had to put the policies in place, or they had to assign some money so the power plants do not go out of the business. But after a few years, things settled down. Power plants found new way to become flexible and compete in the market. And today, I mean, Denmark is the country which has the highest penetration of variable renewable energy. All of these things helped because everybody had belief in the market. They had trust in the market, and everybody kind of were certain that the market would find the best price for them. Can I go to the next slide, please? Now, I want to discuss a little about the experiences here. Till 2022, right after the start of this first Norwegian market and all the forwards, everything started booming. So new countries were added and the trade went up in the forward markets area. In around 2022, the liquidity was so high, the same physically delivered electricity in Nordics was traded up until traded like 8 times more, so the market was really liquid at that particular time. After the addition of new systems, Norway was mostly hydro, and Sweden and Finland had both nuclear and hydro. And then Denmark came in. Denmark was mostly coal at that time. So this also started creating the price differences between the different price zones were bigger and bigger. So there was a need to introduce another kind of hedging product. The system price on its own wasn't enough. Therefore, another kind of products were introduced, which were called electrical price area differential. So this kind of hedging product makes the differences between the system price and the particular area zonal price. You can also hedge them. Currently, both of these products, the product with the system price as the underlying price and the EPDAs are traded in the Nordics. And if somebody wants to hedge 100%, then you have to hedge against both the product, or you need to have both portfolios with you. But the risks, not everybody has the same risk appetite. There are also many participants in market who do not hedge at all, but there is option for all. So if you have a high risk appetite, you can just go directly to the day-ahead market. If you don't, then you can hedge multiple different ways, and the liquidity is available almost everywhere. Having said that, there are also some different setups. For example, between the Denmark has 2 synchronous zones. If you want to trade electricity from one part of Denmark to another part of Denmark, so there is no system price, there is like LLTRs, long-term transmission rights, that you have to acquire. So currently the Nordic market is a little different than other European market because of the concept of system price and how the transmission rights are not explicitly auctioned. Having said that, there is also LLTR within the Nordic market. Next slide, please. Yeah, so now I want to sum up in a way, try and give a summary. So what happened in the Nordics was the day-ahead markets, or everybody were kind of pushed or encouraged to go to the short-term market. Going to the short-term market, there were reliable price signals, and based on that, the forward markets were created. In India, the thing currently right now is there are very few free kind of resources. Most of the power plants are bonded in the long-term PPAs, and there are only like very few compared to the overall generation mix. There are only few who are free to trade in the market. If we limit ourselves, for example, with the physical trading, so either it can be forward markets or it can be a day-ahead market, it's the same kind of generator, same generation units and same kind of demand units that are participating in the market. And it is not particularly helping having very reliable price signals because only a fraction is actually participating in the market. Another thing I want to highlight is the issue with the price caps. So right now, if you look at the last year, for example, with the price cap at 100 rupees, like almost 10 to 20% of the times, the market is hitting the price cap. And this is clearly also not helping to generate the reliable signal, which can be used as an underlying price for the forward market. Unless there is more liquidity, financial elements probably cannot be implemented because you need reliable price signals. And I mean, here again, the problem is how to get more free resources come and participate in the market. If we only remain physical, maybe it's a problem, or maybe it's all about dividing the liquidity that we currently have. Other than that, one more thing, I know I'm probably already out of time. One more thing is like, I understand the argument that forward market, if we can develop a liquid forward market, maybe that's also an option. I mean, without the day-ahead market, that can be done, and many argue for that. And I mean, probably that's also going to be something that can help, that can substitute the capacity payments, and and do the resource adequacy thing. But once more and more renewables are added in the market, then probably short-term market and its development also remains very crucial, because the only way you can implement very liquid forward market is in expense of the short-term market, because the short-term market can only act as a platform to trade the residual. Having said that, I finished my presentation here, and I will let other speakers to talk more, and then we can possibly discuss and debate all these topics. Thank you.
Thank you so much, Kim. I'll now hand over the floor to Mr. Bajaj to bring in the perspective of the power exchanges in India and reactions to some of the issues that Kim has flagged in the Indian context.
Thank you, Shweta. Am I audible? Thanks. So first of all, thanks FSR Global for giving me this opportunity. This is one very relevant topic, I must say that, because what we are seeing in the markets, particularly spot markets in last 1.5 years, the kind of volatility, kind of price increase, this has become more relevant now. So one thing, you started with saying that this is not a question whether we need it or not. So we are debating certain other things, how, in which form it should come, whether it should mushroom towards short-term, medium-term, and long-term, and other things. So I agree with you. There is no question whether we need this market or not. This is definitely required. Every utility, they should have choice how they want to procure they should be able to use all different market segments and ensure that they are procuring electricity in a more efficient way, most efficient way. So we know that many utilities, they have different priorities. Some of them, they value flexibility. They want to put more in the basket where they can buy from spot market. Some want more security, where risk mitigation is a priority, and then they want to hedge their procurement under long-term or short-term contracts. We have seen complete cycle when we started with the market, different market instruments, right from trading and after exchanges. There was everything in the country was tied up under long term. So there was no requirement of hedging. There was nothing called spot. Everything was purely forward market. But after that, when we started with spot market and spot market volume started to increase, there was a time initially when there was a huge supply deficit in the country and prices used to be very volatile. I'm talking about 2008, 9, 10, those days. And after that, we have seen that era where a lot of capacity got introduced, a lot of capacity, particularly thermal capacity, got commissioned. And there was a time in 2014, 15, 16, where we were comfortable in terms of supply. Supply was ever increasing. Coal was an issue for some time, and subsequently, the coal production also improved, and we were quite comfortable. So if I look back, leave aside last 2 years, before that, 3, 4, 5 years, volatility was not a concern because price movement was almost a straight line. Prices were hovering around between 2.5 to 3 rupees, going maximum up to 3.5 rupee on monthly average basis. We were not at all hitting this, the tops bracket, which was 20 rupees earlier, cap, and everything was much under control. So that point in time, we had certain sort of contracts available. When we started exchange operation in 2009, right from the first year itself, we introduced forward contracts up to 11 days. I do agree, and most of you will also say that 11 days in true sense is not forward. So 11 days is something which can give you some leeway over and above spot market, but in true sense, it is not a forward contract. In last year, July, we introduced forward contracts up to 3 months. And let me share some data with you. In the first year, complete year, all exchanges put together, I'm talking about 3 exchanges, together we did about 3 billion units in the forward contract, which was up to 3 months only. There was a limitation there. And this year, if I talk about first 9 months, this volume has more than doubled. We have already done more than 7 billion unit in first 9 months of this particular year. And contracts, the offerings are exactly same. We have contract only up to 9 months. And when we initially introduced it, we were seeing only weekly transaction, maximum up to 1 month transaction. Now we are seeing transaction up to 2 months, 3 months also. So there is a growing appetite. This has been one segment which has been accepted well by the market participants. They are looking up to us, and we are responding to their need. And by introducing, now we have filed with CRC approval for obtaining approval for launching product up to 11 months. And once we have that, and why 11 months? Because in GNA, we have a provision where short-term application can be made for 11 months in advance. We have taken reference from there, and we are going ahead with 11 months. And going forward, after seeing some success there, probably we will extend it by a year or so. We can move to second and third year also. So as most of you will agree, today we are seeing there is huge deficit in the country, particularly peak hour deficit is there. Even in the month of January, when normally January is a month when the demand is not very high and prices are always on the lower side, here we are seeing 10 hours in a day, 5 hours in the morning and 5 hours in the evening when the cap is being hit. These times the prices are more about 10 rupees constantly. So again, the time has come when there is a huge deficit, and because of deficit, many utilities, they want to secure energy. And what are the ways available? They can go to deep platform, they can come to exchange, and left, right, center, they are utilizing all these options and trying to secure energy for the coming summer months and going beyond that also, going for their monsoon procurement as well. So there is a demand. There are certain contracts available. I must say one thing, that earlier it was Deep was one platform which was where e-auction, reverse e-auction was done for the purpose of obtaining the rate. But exchanges today are offering comprehensive contracts where prices are discovered, where reverse auction is being done, and then scheduling, delivering, cash settlement, all those things are being done. One very important point you made, Shweta, in the beginning, that cost of transaction in exchange, because when exchanges are doing this transaction, this is little different from how trader operate. When we are doing, we have to guarantee counterparty risk. So to the generator, we cannot say we will pay you when we will get money from the beneficiary or the buyer who has taken it. So there is a problem. We have to have those margins in place when we are entering into any contract or we are launching any contracts. There is a huge margin requirement. And some of the times we have seen that states are finding it a little difficult to maintain that. And because they had their financial issues, we have extended facility of providing bank guarantee instead of cash. That also we have extended, but there also we are seeing there are certain issues. So, but nevertheless, we have seen some of the states taking step forward and taking advantage of the market. And one more thing, what we are observing here is, since this is one market where the payment to the generators are being made on daily basis, the price difference between this and any other mode of transaction is huge. So we are getting very low prices. In fact, if I compare this prices vis-a-vis price discovered in D platform, there is a huge difference. We have seen difference of up to 1 rupee. So coming back to your questions that you have raised, let me try to answer some of them. So I see this particular market requirement coming more under the short term to begin with, because today, as there is so many changes going on, energy mix is changing in a big way. We are seeing different technologies, prices are dropping again in a very big way. We are talking about distributed generation. We are talking about BESS. That has also, now we are exploring opportunities to bring that also in the market. So this is one thing which is changing, and people are not willing to enter into contract for very long term, not even for the medium term. They want to take one step at one time, and we foresee that this will more transaction will happen within the short term, up to 3 years. That is one. There was point discussed about price cap. I do feel, this is my personal opinion, that the price cap at 10 rupees is little on the lower side, because today there are generating stations which are where the generation cost is more than that. So if we talk about gas-based generation, or if we talk about viability of BESS, today we are saying that on commercial arbitrage basis, BESS should come in the market. And entire Europe, entire US, we are seeing that is happening now. So BESS introduction is in two ground. One is grid system operators are taking it, and second is it is coming to the market. But when it is coming to the market, you should have decent arbitrage available. If we see our market prices between the highest and the lowest, there is only 5-6 rupees arbitrage maximum which is available. And if we talk about the average for the year, in 2-cycle operation, we cannot get more than 4.5 rupee arbitrage. And this 4.5 rupee is not enough to sustain or to add battery capacity on the market route. So this is one thing which we feel that it should be at a decent level. At least there should not be, and in India, we need some sort of price cap. I'm not vouching that. I'm not saying that it should be like European country. It should be very, very high, because we have limitation in terms of paying capacity. We are a little different from there. And what I'm saying is it should be decent enough so that at least gas-based, at least BESS, all those things can also come to this market. And we do not have to create fragments within this particular market. Spot market itself is very small. We are only 5-6% of the total generation in the country. If we start to slice it, and then we are actually compromising on the price discovery. So this is one thing which we feel that going forward, we have to do some corrections and probably increase this. And otherwise, time is right for introduction of forward market. It is very much needed. Volatility is ever increasing, and we should provide all this opportunity to all the participants, and then they should decide what way they want to add. They want to buy power. One more point here is about capacity market. I think this is another thing where we should be working, and some short-term capacity market, at least up to 3 months, is definitely required today. I can quote few examples today. Some of the utilities, they buy power at a very high price just to hedge their position for future. And sometimes what we see, because of some disturbance, some climatic disturbance, prices corrected in a big way. So we have seen people buying power at 8 rupees in the forward market and selling 4 rupees in the spot market. Those things we have seen. So if we can provide them with the opportunity where they can hedge using these capacity contracts, let's say they are securing some capacity, 200, 300 megawatt for, let's say, next 6 months, and energy, whatever they can draw, we are providing flexibility in that. We can provide, wherein they will draw energy only limited to their requirement. If we can provide those contracts, these are again going to be a forward contract. It can also help, or it will provide one more option to the utilities to plan and manage their procurement in an efficient way. So I'll stop here and listen to other views and then chip in wherever required. Thank you.
Perfect. Thank you so much, Mr. Bajaj. You covered a lot of the points that we did flag. So now I'll invite Mr. Kapil Dev coming in from the complementary OTC platform, which is fairly new in the case of India. So we would love to hear how you see the OTC platforms playing a role when we talk about forward markets.
Thank you, Shweta. And thank you, Kim, and thank you, Rohit, for setting up such a beautiful context. Let me tell you, the idea for discussion today is OTC market, not necessarily OTC platform, because, as has been said rightly, exchanges and OTC market, both will have to complement and supplement each other. The reason I say so is, for any market to be very successful, we need to have the market structure which is in alignment to the attributes of the commodity. Now, in terms of electricity, if we see, there are two components to electricity. One is the asset part of it, and one is the running of that asset. So there is one capacity and there is one energy. Capacity by nature is long-term. It takes time to build capacity. As running is actually on a daily basis, which is the energy market of it. That's one. Second, if we look at energy, and in terms of contracting, the value or the attributes of the commodity are the time of delivery. So we value electricity across the day at different points in time differently, depending upon the load. The other attribute is location, because we are a very, very wide country. So the price of electricity or the value of electricity perceived by market participants in the northern part vis-a-vis perceived in the eastern part or the southern part is very, very different. So that location becomes important, or geography becomes important. This is also because of the physical infrastructure for delivery, which is congestion. This is all for the electricity bit of it, which is the energy part. But the moment you want to do contracting farther from delivery, the concept of capacity and the risk associated with that starts to come in, as Rohit was clearly articulating that there needs to be some flexibility. And that flexibility is where the exchange and OTC market will have to complement each other. Taking to a very, very quick context, Khem also mentioned about the evolution. Rohit mentioned about 2009. So we had our exchanges which came into being in 2008, 2009 time frame. Before that, for a decade, bilateral and multilateral markets were developed by traders, and there was a need for the spot market in electricity. After the success of spot, whether it is robust price discovery, whether it is payment security mechanism, will all bang upon a bilateral and multilateral market for forward delivery. And therefore, if we are planning to have derivatives, futures, options, ways and means to cover the price and quantity risk, we need to have a very, very liquid OTC forward market. The problem statement, what we face today, the volumes have become stagnant, whereas the prices are rising. This was same problem which we had faced in 2008, when we said that the volumes have stagnated at about 10% of generation, but the prices have gone up. Therefore, we need to have a spot market for electricity, and therefore the exchanges came into being. So the way we look at it in terms of how can we introduce depth into the market, in our current market structure, the minimum period for delivery is 2 time blocks, which is about 30 minutes. The bidding or the marketplace, the opportunity to that market closes about an hour before that, which is known as real-time market. If we move from that spectrum to next market, which is available to us, is when you want to trade day ahead on a day ahead basis, which essentially is the spot market. So these are collective transactions. Similarly, if you want to have a week ahead delivery for a week, trade happening a week before in collective transaction, that opportunity should be there. If you want to do a monthly contract in collective transaction, that should be there, so on and so forth. The moment we move away from the diagonal, whether it is in terms of trade scale or delivery period, we need to develop the OTC market. And that OTC market essentially is the forward market. And therefore, OTC market and exchange, both the marketplaces will have to complement each other. If the product is completely standard and the process is completely standardized, in order to build liquidity, in order to ensure that the efficacy of the prices discovered is there, collective wisdom is picked up, exchange is the place. Spot market, day-ahead market, RTM market, all those markets are to be traded on exchanges. The moment there's either change in the product contours or change in the process, configurability in the process, I think it becomes OTC. And the reason for that is, if you want to build liquidity and ensure that the price discovery process is robust, the ability to change any of the parameters which has an impact on product has to be taken off. As Rohit was very clearly articulating, as an exchange, even if it is a month-ahead product, our exchange has to remain counter guarantee. Therefore, risk management system has to be robust, even at the cost of it being high, because then only the true price would be discovered. The moment there's an ability to change that, it becomes an OTC product. Similarly for the process part of it. So I think this is where the exchanges and the OTC platform, or OTC market complement each other. We have seen platforms in other market, OTC trade eventually is moving on a screen-based facility, so that transparency is inculcated into the marketplaces, and that has been the trend across markets. Say, for example, when SEBI introduced a platform for direct interaction between market participants, that has to be on a screen-based facility. Exchange would always remain a counter guarantee and to both the participants, whereas the market also needs an avenue wherein they can directly interact between themselves. As regards to a few of the issues which have been raised in terms of building liquidity, I think we also need to appreciate that there are at least three dimensions to liquidity. One is the participation bit, which with number of participants increasing, that has been taken care of. The second is, how much price movement happens on a particular movement, which denotes the depth of market. So, for example, in any market, if a bid is taken away, which is 100 megawatt, what is the movement in price? We take away the bid at 200 megawatt, what is the movement in price? It could be 1 paisa, it could be 2 paisa, it could be 3 paisa. The moment you take more than 1000 megawatt, there's a drastic change in the prices. So that denotes the depth of the market. The second dimension to look at this is the breadth of the market. That means if I want to move the price by 5 paisa, what is the minimum quantum that I need to take off that market? That dimension of liquidity would come only and only through standardization. The other aspect which came and both of them touched upon is price caps. As a practitioner, and in my opinion, price caps are required, but should give enough leeway to the market participants to figure out their requirement. For example, the buyer, when he say, if a seller comes to the market and he says that he wants to sell at 8 rupees and there are no buyers to that power, that means whatever he's demanding is not fit for their consumptive use. Similarly, if a buyer wants to buy at 20 rupees, there have been instances wherein people have been looking at power to buy at even 20 rupees because they didn't have access to those markets. So I think price caps, even if they are required, they should be big enough to provide that opportunity to the market participants to look at their parts. Capacity market is one thing which have been talked about. I think the moment we move away from delivery, this things get into being whether I'll be able to supply it or not, whether you look at from generator side, because generator, even if it is 99.9% available historically, that does not guarantee that will be available on that particular day. And therefore that flexibility has to be included into contracts, and therefore the capacity contracts or fixed price contract, all those things starts to come in, or flexibility, even if it is a single price energy contract. The other thing which has been missing in the OTC market, and that is where OTC market will have to rise to the occasion, is risk transfer between parties. Say, for example, I want to buy a high-priced generation which is benchmarked to imported coal. Now, I need to give certainty to the buyer that yes, I'm going to buy. And the buyer also needs to transparently mention that this is going to be benchmarked to some price. So if you want to do that benchmarking of the contracts, which essentially are, not fixed price contract, benchmark contracts. So those type of contracting structures needs to be there, which are essential means for risk transfer between buyers and sellers. There are certain things which can be done only on exchanges, and exchanges are the hallmark of it. There are certain things which have to be done in the OTC market. This assumes more significance because the participants in the market for physical delivery remain the same. and therefore we should have this distinction between marketplaces as well. As has been the saying, if you see the asset, which is capacity, is long-term, energy, which is short-term, truth lies somewhere in between. So we need to have a market. Even PPAs, which are 25-year PPAs, are also market. The only thing is we need to develop a market wherein rigidity, which was there in PPAs, is taken off, and people can do contracting or risk transfer between them on mutually agreed terms. I think I'll stop here and try to pitch in whenever there's any other requirement.
Perfect. Thank you so much, Mr. Kapil, for flagging that. And I think on that note, where you talked about contracts and looking at the perspective of the buyers, may I invite Mr. Shukla ji to share his views as the DISCOM. And then, of course, we have the discussions. A note to the audience, in case you have any questions, please put them in the Q&A box. We will pick it up, or the discussants also will pick it up from there and see how we can tie it into the questions they'll ask our speakers. So, floor to you, Mr. Shukla.
जी नमस्कार, मैं संजीव शुक्ला हूँ, चीफ इंजीनियर पावर मैनेजमेंट सेल उत्तर प्रदेश पावर कॉर्पोरेशन में। मैं इस समय उत्तर प्रदेश में हमारे 5 डिस्कॉम्स हैं, पूर्वांचल, पश्चिमांचल, दक्षिणांचल, मध्यांचल और किस्को। जो हमारी स्टेट का डिमांड कर्व है वो बहुत ज्यादा पिक्यूलियर है। मतलब पीक आवर्स में उसकी डिमांड, अभी लास्ट ईयर वी हैव फेस्ड 28,284 और मिनिमम 18,000। इसी तरह जो ये जाड़े चल रहे हैं, इसमें भी हम शाम को लगभग 22,000 मीट कर रहे हैं, जबकि दिन में वो घट के 14,000 के लगभग आ जाती है। तो ये जो मैक्सिमम और मिनिमम में जो लगभग अंतर आ रहा है, दैट इज 30%। अभी जो गर्मियों में हम पावर एक्सचेंज में दिक्कतें थोड़ी सी देख रहे हैं सर, वो हमको अवेलेबिलिटी कम होने की वजह से वी आर स्टिल नॉट गेटिंग फुल पावर। जो हम बिट डाल रहे हैं वो हमारी लगभग 35% या 40 ही क्लियर हो रही है। ये जो नया प्लेटफॉर्म 11 मंथ्स का किया हुआ है, यह निश्चित रूप से प्राइमा फेसी अच्छा दिख रहा है, क्योंकि एक डीप पोर्टल के पैरेलल में हमको एक प्लेटफॉर्म मिल जाएगा। अभी हमने एलडीसी में भी 3 महीने के लिए अपनी एक रिक्विजिशन डाली हुई है। इसमें सर 3-4 इश्यूज मैं जो अपने छोटे से कार्यकाल में शेयर करना चाहूँगा कि लंबे समय के लिए जब हम अपनी डिमांड फोरकास्ट करते हैं और अवेलेबिलिटी की प्लानिंग करते हैं, तो कई बार हमारी फोरकास्टिंग उतनी परफेक्ट नहीं हो पाती, कई और उसमें दिक्कतें आ जाती हैं। जैसे इस बार का अप्रैल 23 हमने प्लानिंग की थी कि बहुत गर्मी पड़ेगी या जो भी रीजंस रहे, तो इतने लंबे समय के लिए जब हम एग्रीमेंट्स कर रहे हैं, तो हम लोगों को ये भी देखना पड़ेगा कि जो हमारे शेड्यूल्ड रिवीजन का उसमें प्रोविजंस होने चाहिए, कुछ डिविएशंस अलाउ होने चाहिए कि जो रियल टाइम पे अगर हमें मान लीजिए उतने की आवश्यकता नहीं है, तो दोनों पार्टीज को ये लिबर्टी रहे कि दे कैन चेंज दोस थिंग, कि हम उतना कम शेड्यूल दें। लिक्विडिटी डैमेजेस के क्लॉज पे भी विचार करना चाहिए। ये तो मेरी एक रिक्वेस्ट थी कि अगर एक्सचेंज इस पे विचार करे। प्लस एक मैं और रिक्वेस्ट करना चाहूंगा कि अगर ऑल्टरनेट सोर्स, मान लीजिए किसी जनरेटर से मैंने 6 मंथ या 4 मंथ या वॉट एवर इज द मैक्सिमम 11 मंथ सपोज करिए टाई अप कर लिया, और उसकी मशीन कोई आउट हो जाए, तो हम ऑल्टरनेट सोर्स पे भी उसको लिबर्टी दे सके, क्योंकि हमारे पास अवेलेबिलिटी रहे। अभी एक बात चल रही थी प्राइसेस के ऊपर, 20 रुपए भी रहा, फिर 12 रुपए रहा, अब 10 रुपए रहा। मेरी छोटी सी एक गुजारिश रहेगी जो मैं आपसे करना चाहूंगा, स्टिल फॉर अस द 10 रुपीज इज ऑन हायर साइड। ये थोड़ा सा इस पे भी और हम कर सकते हैं कि अगर कुछ उनकी जनरेटिंग कॉस्ट या पूल टाइप की कुछ हम टैरिफ निकाल के अगर इसको और फर्दर कैप कर दें। अभी सर ने कहा कि 20 में बायर्स ने लिया, 12 में भी लिया, जिसको जरूरत होगी लेगा। आई डू एग्री विद दैट। एक उदाहरण छोटा सा दूंगा, इट इज नॉट इन द कॉन्टेक्स्ट ऑफ दिस डिस्कशन बट एन एग्जाम्पल। लोगों ने रेमडेसिविर जो इंजेक्शन था वो 2-2 लाख में लिया। इट इज ऑल गेम ऑफ रिक्वायरमेंट, आई डू अप्रिशिएट दैट, बट वी शुड ऑल्सो थिंक बीइंग इंडिया एज ए कंट्री कि हम क्या इसको और कम कैप कर सकते हैं। इन बातों पे भी मैं जरूर कहूंगा कि एक्सचेंज को विचार करना चाहिए। देखिए, ये जितने आपने नए प्रोडक्ट लगाए हैं, ला रहे हैं 11 मंथ्स के लिए, ये प्राइमा फेसिया तो मैंने पहले भी कहा ये ठीक लग रहा, लेकिन बिना रियल टाइम की अवेलेबिलिटी और लिक्विडिटी के बिना किसी भी यूटिलिटी डिस्कॉम के लिए ग्रिड को चलाना, कंटिन्यूस पावर देना बहुत मुश्किल हो जाता है। जो भी आप नए प्रोडक्ट्स ला रहे हैं, मैं पहले भी लोगों को कई प्लेटफॉर्म से गुजारिश कर चुका हूं कि उसको डैम मार्केट और आरटीएम मार्केट में उसकी लिक्विडिटी सुनिश्चित कर लें कि वो बहुत कम ना हो जाए, क्योंकि दे हैव गॉट देयर ओन इम्पोर्टेंस। विदाउट डैम, विदाउट आरटीएम लिक्विडिटी, रियल टाइम पे आप कंटिन्यूस पावर देना भी उतना ही मुश्किल है जैसा लॉन्ग टर्म प्लानिंग। तो इस दोनों के बीच में कहीं ना कहीं एक बैलेंस लाना पड़ेगा। इन्हीं शब्दों के साथ मैं धन्यवाद आप लोग देना चाहूंगा, इतने अच्छे प्लेटफॉर्म पे आपने मुझे बुलाया। थैंक यू सो मच।
Thank you so much, Mr. Shukla ji. I think I'm sure the exchanges and OTC are waiting to respond. But before that, let me get in a little bit of the regulatory perspective. So may I invite Pujari sir and then followed by that RP Singh sir for quick reactions from you and to the speakers, and also if you have a question or two to them. Pujari sir.
Thanks for sharing all the insights. One or two things that came out very clearly is, yes, liquidity is an issue. And second is that the financial problems facing of the discoms that they face is also an issue, because it was pointed out by the discoms liquidity and also in the discussion. Unlike a long-term PPA where there are credit available built into the full contract, here I think, as I was mentioned earlier, the counter guarantee has to be given. So margin money or bank guarantee or some other arrangement has to be done. So the discom has to put some financial position upfront. So it has its own influence. That's one issue which we need to address. And second is the link with the capacity market and capacity. So, but good thing is that, as was pointed out by the exchange, there is an appetite for this product. Gradually, we understand that, or everybody thinks that initially it will be the short term of 3 years. But anyway, any new product that comes in, people are concerned, and then based on the experience, based on how it develops and based on how it impacts the other markets, as was mentioned, DAM or RTM, this will play out. But the crucial basis is the liquidity, availability, and also the financial position of discount. That are the two crucial points that I look at it. As far as the regulatory, any specific issues are there, I don't think there are any specific issues facing. And as and when, I always say that as and when these products play out in the market, if any issues do come up, the stakeholders always approach the concerned, in this case CRC, and then CRC is always open to look at those provisions, and they do make necessary changes or amendment in the. That's not the issue. Is that the market should have confidence. The price cap issue, of course, is a different issue. It has happened in a particular time, but at that time the feeling was that the price cap will be for a particular duration or short term, but anyway, it has continued for a longer term. But that's the issue which probably needs to be debated, and there are two viewpoints, as was pointed out by the discoms, and then the considered view has to be taken by the regulator and the history. So I leave it there, because both sides have strong points, and then there is no black and white answer to that. There will be a lot of gray areas, and then I think it's always debated, and depending on how the situation develops, what is the context and what is the other environment, maybe based on that can be calibrated. Not that the price cap was not there. Price cap was there. It was 20 rupees, which and because of the liquidity position in the market, probably 20 rupees was hardly hit any time. So it depends. So 10 rupees, 12 rupees, 15 rupees again is a judgmental issue, and then depending on the context, probably decision maker will take a view on that. But I am really happy to see that it has taken off. Yes, maybe at this sitting here, we can look at it and say that, okay, in the short term, it will probably pan out in the short term range of up to 3 years. But I'm sure that with the experience, there'll be products which will be available at due course beyond 3 years. So I only asking one question: how do we basically address the issue of financial issues of the discom, because it has financial implications very clearly. And then the capacity market, as in today we are still capacity product, we need to really think about it and get prepared for that, because that itself will take some time to really design it and then bring it to the market. So these are the two things which probably the regulators and the stakeholders they need to look at it and then start working on that. So if any, that's my observations, and anybody wants to respond, or over to Mr. Apis.
Maybe we also taken the question from Mr. Singh, RP Singh sir, and then we give a quick reaction from all of the speakers. Morton, you can also react as a response that they have to the questions that other speakers have put forward.
Thank you, Shweta. I think very insightful comments have come from the participants. My first observation, and then it will be followed by a question, is that I just went through the National Electricity Plan and found that by say next 6-7 years, our demand is expected to go up to more than 370 gigawatts from currently 240 gigawatts. And the energy consumption is also going to go up from say currently 1500 billion units to 2500 billion units. So there's more than 55% increase next 6 to 7 years. Currently, the share of the exchange traded electricity is less than 6%. So from say 1600 to 2500, that means 900 billion units of additional energy every year will come into the market. And in the capacity term, say from 366 peak demand is likely, even if we expect, then 125 gigawatt is going to come in next 5-6 years. So there is plenty of opportunity for market to grow in volume. I don't know about the share as a percent, but I think that there is a plenty of opportunity for market to grow in terms of volume from the present level. Because the discoms, as it has been pointed out, their preference is to going for shorter tenure instead of going for 25-year long-term PPAs, etc. So in that respect, the other problem comes into picture is that the policy objective is to go in for more and more renewable. Whatever capacity now is being added is in form of renewable energy. And renewable without battery is not a RTC. It's not a around the clock ability. So first question is that what the exchanges or the market they are targeting from this additional capacity which is likely to be added in the country. So what is their target to be captured as a forward market product, number one. And number two, how they are going to design their product so that there is a demand for it. Because there is some disconnect between the renewable energy supply and the demand profile of the states and most of the discom, except for the few discoms or the states where the industrialization is high, the peak and the solar both coincide with each other. But otherwise, there is a mismatch. So how they are going to design their product, whether it will be RTC product in the forward market, or whether it will be only peak duration product, or whatever it is. And third is my observation that since this huge capacity is to be added, so why can't we think in terms of developing a capacity market to attract investment by having products like, say, T plus 4 years, T plus 6 years, whereby, we do away with having Section 62 project, that is regulated project. Instead of regulated project, we going for market-based procurement of investment in power. Say you have a T plus 6 years and you want, say, I want 1000 megawatt or 2000 megawatts. Even for a greenfield product, somebody will decide whether he's able to provide that capacity or not. So whether the exchange are thinking in terms of those areas and whether they think that it makes sense or not. So these are my initial comments, and I think I'll wait for some more opportunity in future to interact. Thank you.
Thank you, Mr. Singh. I know Morten has already raised his hand. Morten, first reactions from you, and then we go back to the speakers.
Yeah, thank you very much. And thank you very much, everyone, for some very interesting interventions. I noticed that in particular, the adequacy issues are of high importance and interest of just about everyone. And I think it is when we talk about the long-term market and financial or physical, then it becomes very important to address the length of contracts when we discuss whether a capacity market can be complemented or replaced by long-term contracts. Because if we want to incentivize new generation assets to come online, then we most likely need relatively long contracts. And the question is, will there be a request for that in the long-term market? So we will need an opposing party to sign those contracts. And we need a stable underlying pricing for a forward contract. And that is the day-ahead price, at least it is in Europe. So we need a certain volume in the day-ahead market to say, well, we think the price discovery we have in the day-ahead market is good enough for us to be trading the power there. And then we settle the long-term contracts financially subject to this. And I think in the future, and I'm happy to hear that the discoms are not necessarily looking at in the future signing a lot of 25-year contracts. If we can somehow reduce the length of those contracts that are entered into now, that will mean the likelihood that we will get more volume in the day-ahead market in the future is higher, and we can get more liquidity there. Then we create a foundation for the forward market as well. So I think that is some of the considerations that we need to have going forward.
Thank you, Morten. I think Mr. Bajaj wants to intervene as well. Mr. Bajaj, the floor is yours.
Yeah, Shweta, thank you. So let me start with just one comment on what Morten has said. So he's right in saying that spot market should be robust enough. There should be enough liquidity so that it is giving right kind of price signal to the market on which all the settlements can happen. Now, this settlement could be for forward market delivery contracts. This settlement could be for derivative contracts, so on and so forth, for everything. Here, what we have been discussing, in fact, right from the beginning, the point that we were discussing, or in fact, what Kapil also mentioned, we are all talking about forward contracts which are 100% delivery rates. We are not talking about financially settled contract as of now, because what we understand, we do have spot market, and the spot market size is very limited. It is, as rightly said by Singh Saab also, it is about 6%. And it's such a small spot market is not equipped to give probably the right kind of price signal for financial derivatives. We have seen earlier it was a little bit stable. Now the volatility is also very high there. So I think we have to wait for some more time, or we have to think for something else before we do financial settlement on the basis of this price. But as far as forward market delivery-based contract is concerned, this price is good enough, and this has been giving references for last almost 10, 12 years. And this has been widely used. And if you compare all these transactions, you will find that there is some sinking in the prices of all the products that are there available today. So moving on to the second question, the point raised by Mr. Singh, and that's a very relevant one. 240 become 317, and we do not have right kind of visibility how this is going to come. So ideally, if you ask me, today 87% tied up under long term. If actually what should happen is any future demand which is coming, it should come to the market. So let's say if we are going to add 500 billion units in overall kitty in next 5 years, large part of this ideally should come to the market because no new long-term PPAs are being signed today. But what in our case, what is going to happen here is there is about 27 gigawatt of capacity, which is thermal capacity, which is going to come. It is already signed up where the states are beneficiary. 13 gigawatt of, again, central generating station capacity is there, which is under tendering. And after that, recently Minister has announced that 40 gigawatt more will come. So total altogether, this 80 gigawatt of capacity is coming, but majority of this capacity is coming under long-term PPA. This is what we are given to understand. So market will increase, market will continue to increase on the basis of what additional supply distribution companies will get. I'll just share one data with you. Today, almost 60% of the cell which is coming on the exchange is by distribution companies. So distribution company, they have different profiles. Everybody has got different profile. We have such a huge country where southern demand is very different from northern, and sometimes some state is surplus, sometimes some other state is surplus, and on during those periods they are selling. So majority of the cell contribution is coming from distribution company. So entire new addition will not come. Probably will continue to grow at a rate of 20-25% in times to come. No major change will happen, but yes, growth is going to be there because discoms will themselves become surplus in certain hours that they will sell. Now, the third point which I want to talk about is what Mr. Shukla has raised about bringing some flexibility in the forward contract. I think this is a very good point. In fact, all the stakeholders have been talking about it. Generators are worried about it. Distribution companies are worried about it. We have NTSD contract, non-transferable specific delivery contract, and there is zero flexibility as of now when we talk about 3 months. But with zero flexibility, we cannot think of introducing 11-month contract. Tomorrow, somebody might not have coal available, somebody might not have machine available itself. There could be some breakdown also. So we have to keep those things also into consideration, and change of source should be allowed. Some flexibility should be given to discom also, that you are also allowed to reduce it by 20% so that overall the process is very efficient for you. I think this is one thing which we have included in our petition, and we are talking to regulator to give us approval so that this benefit can be passed down to everyone. And Pujari sir mentioned about financial issues of distribution companies. And sir, what we are doing is we are trying to minimize what is the minimum amount of BG we should take so that we are also secured, and we can take this position also, and we can provide risk mitigation also. So that working we constantly do, and we cut all those corners. And just to give you idea, for a month energy, we are taking about 15% of the total energy cost in the form of BG as a margin. So, and we are gradually reducing it after GNA. We have some more room available to reduce, and we are incorporating that. So this sort of BG is what we are insisting, so that there is some arrangement there. Suppose there is a huge default, then we should have also some fallback arrangement available from where we can also charge that. So there are some more things which we are discussing with the various policymakers. Suppose tomorrow we exchange payment is also part of LPSC rule. So if that can be done, then we can do away with this BG also. So we are constantly working. We have brought it down considerably in the recent past, and we are hopeful that we will bring it down further. Thank you.
Thank you, Mr. Bajaj. If it's okay with the audience, with your permission, we'll just extend it by another 5 minutes. Quick reaction from Mr. Kapil Dev, and then the floor to Mr. Singh to conclude and tie up the discussion. So, Mr. Kapil Dev, your reaction?
Yeah, so there were two things which Singh sir mentioned. One was in terms of capacity, T+4, T+6. Perfectly, sir. And that is the way forward for new capacities, because energy prices, even if it is on a daily basis for 10-year period, do not give the signal for new capacity addition. So worldwide, if we see all the markets, the capacity markets are different markets. There's a defined window. It is when it is opened, and therefore everyone comes into those windows. That's the way to go forward. But unfortunate part of those markets is they cannot be straight jacketed into a specific contract. That's and therefore they move out of the exchange part of it. Shukla sir mentioned about flexibility, which is very much required, and these are the risks which a participant in the market has, and therefore there should be a market wherein these risks can be traded. The only problem with flexibility in a straight-jacketed contract on an exchange is the value of flexibility by different participants would be different. And therefore, the efficacy of price for that particular contract has to be frozen with frozen contours. That's the only bit which I want to say. And therefore, then the price discovered becomes the benchmark. and it can be used as an underlying.
Maybe just two questions that we see. I don't know if the speakers had the time to look at the Q&A box as well. We have some questions directed. Mr. Singh, if you can also react to that, or if you can, I think there's a question also for Mr. Bajaj. Basically, I think one of the points raised by Mr. Sethi has been that we do not have enough capacity to meet our demand. We're talking about the rich states being compensated utilities, but the unserved or undeserved consumers at a reasonable price is a pipe dream in some sense. And of course, we have a question from Mr. Alejandro, who's talking about, can you explain how the DAM or the real-time liquidity is not enough to settle financial long-term contracts? So any quick reactions from Mr. Bajaj, then Mr. Singh, and then we close.
Yeah, so there is a concern about availability. That's a real concern. Even during the month of January, when the demand is relatively less, I must say, we have only peak demands. And during peak demands, we are facing certain crunch. But we are very hopeful that there are so many measures taken by government where they have extended Section 11, which means that imported coal plant will continue to run. Gas-based plant are being tendered now. NVVN has issued one tender where 4,000 megawatt gas-based power will come to the market. Similarly, URS power has started to coming to the market now, which is further increasing the overall liquidity in the collective transaction, which is day ahead plus RTM. So coal prices have come down. Imported coal, all other merchant power plants are also running. And today, many of these generating stations have gone for maintenance because as per the demand projection, demand is expected to increase from March. And we want all these plants to complete their maintenance part by February end. So as this maintenance will be over, we expect all these plants also to synchronize with the grid and start generating and increase the liquidity in the months to come.
Thank you. May I invite Mr. Singh to conclude?
Thank you, Shweta. Today's insightful webinar has shed light on immense potential of the forward electricity market in India. And the discussions have provided comprehensive understanding of the challenges and opportunities. As we all know that Indian power sector is gradually now transforming from a traditional base load, peak load to a flexible generation and flexible load. And this shift is being fueled by the increasing grid integration of renewable energy and demand from e-mobility and industrial decarbonization. However, in absence of a robust resource adequacy framework, demand forecasting, decrease in cost of renewable, etc., they are amplifying the risk associated with long-term PPAs of the DISCOMs. And the DISCOMs are now preferring to go in for short-term contracts. And this short-term provides them a greater flexibility and eliminates their obligation to pay fixed charge for the contract for an extended durations. Under these circumstances, the forward contract provides an excellent opportunity to everyone. Although they are currently limited to 3 months and they fall short of meeting the diverse short-term power requirement of the DISCOM. And the DISCOMs occasionally resort to the deep portal facilities. However, it is good that now power exchanges are going in for a long-term forward market products like 11 months as outlined by Mr. Bajaj, because the legal hurdle has already been resolved by Honorable Supreme Court, where it has clarified the jurisdiction of CERC and SEBI respectively. The GNA regulations and the grid code have been notified to clarify the transmission setup in the country. So I think it will be a opportune moment for the Indian power sector to be benefited by forward market products, and the phased introduction of forward market products for a longer duration will enable larger participation and increase the liquidity, lead to price convergence among different market segments. And I think it will also provide signal which will serve as a benchmark for evaluating investment decisions, and DISCOMs will be able to assess the reasonableness of their purchases. Important thing is that the metrics and monitoring methods should be deployed to assess the efficiency of these products. And these matrices should be including liquidity, product availability, low transaction cost, diversity of counterparties, etc. To conclude, I extend my gratitude to our speakers and participants for their valuable insight and hope that continued dialogue and collaboration will propel the forward market in India. Thank you.
Thank you, everyone. Wish you everyone a lovely evening, and we'll see you at the next debate, which will talk about the financial side of contracts and try to throw some light on energy derivatives. Thank you. Thank you to the speakers and to all the participants who are here.
Thank you.
Thank you
Thank
very
you.
much.
Thank you, Shweta. Thank you, everyone.
Thank you. Bye-bye.